Hello everyone, Huzaifa Farouk here from Trade Simple, and I thought I'd shoot this quick video just to take you through some of our charts and just price action, see how it works, where you can buy, where you can sell, why price moves the way it does, where you have your opportunities to make day trading trades, day trading decisions as well. Now I'll be taking you through the Forex market today, and I'll choose random pairs to take you through. I'll start with JBP, JBY, GBP, JPY, and for this pair, now what I do is this is how I usually visually backtest price action if I were to, and this is how I encourage you to do it as well, because you can see and you can build your own lines and you can tell where to place your trades. So in this example, we're looking at the 5-minute chart on June the 23rd and of 2017, and we'll be taking you through where you can place your lines. So beginning of the day, you're looking at some price action here that you just want to mark your lines up. So you take this and you make the color a different one. We'll just lock that in. And you copy, and I'm just going to draw some lines of areas where price bounced off. And what you're trying to do is you're trying to understand what happens when price comes back to that area. And these are zones. These are not necessarily lines, but it's easier to create lines. So it's good for you to look at areas with beside those lines for potential areas to place trades. So as you can see here, I usually start off my day at 8 o'clock a.m. Eastern time, and we're watching to see what happens when the price gets to a certain point. Now as you can see, it bounced off of here, and this would be a zone, because remember, here where you see this wick, it bounced off there too. So this technically is a whole zone that would accompany this whole area here. Okay, so you're watching for price action in that area. I would probably take a trade there, just because I think that this is going to bounce from that area, not necessarily reach this line, but bounce off that zone of support. And I usually trade with 10 ticks profit target. So here you would have hit your 10 ticks, especially if you started at 53 or 54. You would have hit your 10 tick target there. Now you're also looking for higher highs and lower lows. And in this case, you saw that the price went all the way up, bounced off this area, and started making lower highs. And that signals that that big move was a temporary move, probably for the market makers to come in and cash in by either taking out all the sell orders that were sitting up on top of there, or the market just drove up and a lot of profit targets were sitting there. So once those profit targets are hit, the market sells itself off slowly and surely. So that's probably what that was. And what you're watching for is, where do I place a trade? Now it looks like it's kind of ranging, so we're looking for a good area. And here the market broke down into this area. There's obviously, when you see wicks, that definitely is a signal that there's some support there, but you don't want to take a trade there necessarily, because you're trying to see what happens. This might be going into a downtrend. And also see that in this area where it broke off, this wick where it touched here, here, and here, and when it broke, it hit this wick right here and it went down again. So that's an area that's called old support is new resistance, and in this case it's probably going to go a little down, which it did in this bar. It went down about 10 ticks, and now you see that it's directionless again. Now remember, you have your area right here. So when this hit, you're watching for it to touch this line or area again, and when it does, you have to make a trading decision. And in this case, it's not doing anything yet. Even in this area, you could have taken a trade right here because of this wick, but remember, there's not a lot of confirmation for you to do that, so that would definitely be an aggressive trade. So you're watching, and right here, this signals to me, especially this wick and the long wicks and the exhaustion doji candle, which is just a candle that looks like a cross, that this is definitely going to bounce off, and it does. See, so you know, a 10 tick target, 10 tick loss, your stop would have been all the way up here where this new line is, and your profit target is at 62, so you would have been hit, but I'm pretty sure this is going to go down further, which it does right there. And as you can see, when it does break down, When you draw your resistance line and breaks those lines, you have to watch for it to come back to that area to see what happens. Because look at this prime example. You got a line here, because remember, this is support, because whenever it hits this area, it's bouncing up, and that's what these long wicks are signaling, and it's bouncing off that area. When it comes, breaks that area, and it comes back, it bounces off. See? So it bounces off. Put your line there, it came back and it bounced off. So that's what you got to look for. See here, there's another area because it came to this area and it bounced off. And when it does bounce off those areas, you create a line, wait for it to break, watch it come back, and then take a trade in the opposite, because old support becomes new resistance. Okay? And that's, you're at 1 o'clock, you're definitely stop trading. So let's look at the previous day and see what we can find here. In this case, you're sitting at, let's say 7:30, you wake up and you're waiting for the market to move. Draw your lines up, see where your lines are. I would probably draw one here, 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 and there's some resistance here. Okay, now I'm gonna see what's happening. Okay, it's 8 o'clock. Now we're watching to see if, there was some support here. So see, it came out and it bounced off a little bit. And boom, look at that. It hit a double top, bounced, broke that range, came back up, and then sold off. That would have been a big target. And then look at that again. Your area of support right here, because remember, it came down here, bounced off that line, broke that line, came back, and then boom, just like that. That's how it looks. That's what the market's doing every single day. And look at that. This is just endless. Roughly that area, it breaks off, hits that area. Your stop would have been all the way here. You've been safe. Bounce off, and boom, you're good to go. Okay, and then when it breaks that range, he's watching it to come back now. Okay, remember, you can never assume that you're in a range or in a trend. None of that stuff. You can't assume any of that stuff. These are all probabilities, and probabilities mean nothing happens every single time. Okay, you gotta be careful with that. So let's look at the next day now. Let's just erase some of these drawings. Okay, we'll go to another pair soon. Now this looks like this market might be moving a lot. So remember, you're at 6:30. Let's look at 7:30-ish, and you're watching. You're drawing your lines. Okay, this is already broken out quite significantly, so you might not be able to catch any big moves just because you may have already missed them. So let's just see what's happening so far. This is the low, and let's continue. Okay, we're at 7:30. Now you can see, even when you're not trading, it hits that, bounces off. So you draw your resistance. Hits it, bounces off. You draw your resistance. When it breaks, watch it come back, and boom, there's your 10 ticks right there, 10 pips. Okay, then you draw another one right here. Watch it come back down. Boom. See that? Look how easy that is. Look at how much, these are 10 pips each. There's 3 trades right before even 8 o'clock before you even start. Now you're watching the market. See, it's 9:30 and it looks like volume has definitely dwindled off. But you're still drawing your lines. You're staying disciplined. You're drawing your lines, watching to see what happens when the market reacts. Okay. Okay, now it's definitely gonna bounce off. Cause see, it drew that line, bounced off this line here, and boom. That was old support, new resistance. Okay. Boom, right here. See that? Broke off this line. Broke off this line, came back, and boom, sold off. Okay, volumes definitely has dwindled. So stop trading. Okay, let's look at another pair. Okay, so let's take you through Euro USD. The last day was actually happening right now, which is the 26th. So 23rd is, I believe, right here. 22nd and 23rd is right here. So let's take you through your USD. As you can see, you're watching, waiting for your 730 to hit, drawing your lines. Alright, let's draw our lines. Alright, so this is the bottom here. We'll draw a line here. Remember, you're connecting this, and all these resistance spots here, and the high of the day. Okay, now let's see what happens with the price action. And remember, if you think it is a range, you can always buy at the bottom of a range. Okay, so see here, it hit the line and it went up here. Well, you can't assume that this is gonna bounce off this because you don't know whether it's range. So that's the inherent risk you get in trading ranges. So you're waiting for either a breakout or a range trade, but I prefer breaking out trades for sure. Now this is kind of a range that if this breaks out here, then it's probably going to come down and bounce off. And don't just think a red bar means that it bounces off. If it breaks off and you see it's visibly out of that range and price comes back, it can still shoot up like it does here. And then look at that. So it breaks off this area, comes back down here, and it bouncing up. Okay, you have your 5 pips, or in this case, you're trading in 4 decimal places. So every pip that it moves is $10. So getting away with a 5 pip target is sufficient. Even though you can trade 10 pips if you want, but it takes a little longer for you to do that. So you keep on moving it up. So that's 2 trades already you could take. See if it comes back here, or whether it will dwindle down. Now this has a lot of momentum, so it didn't get a chance to come back, and it has died down. So you'd be risking anything by trading anything here, especially considering that these candles are so small and the range is also small. So let's look at another day now. Oops. Okay. So you're drawing your lines. Okay, you have obvious support here. You have obvious support here, here, here. Let's see what happens. Okay, and it bounces off. Okay, just as we expected. Okay, so this, we're gonna have to adjust it here. Let's see what happens here. So see, you could place a trade here, you would have been safe and watch it go up. You could have placed a trade here when you drew your line at this new low, watched it go up. Or you can just wait for the breakout and then see if it comes back. Simple as that. Okay, hit it here and boom. See, hits the area. See, remember, even if you were to trade at the line, your stop is all the way here, right? And your profit target is right here. So it would have hit your profit target right there. And you're done for the day. Another Euro USD pair. Look at that, bouncing off the same line over and over again, right? Now, if you had taken, you could argue that this right here, by definition, is a trade, and you're right, that is a trade. Now, would you have won this trade if you had taken this trade at 41, right when it touched? Your target would have been at 31, and your stop loss would have been at 51 right here. So in order for you to lose this trade, it'd have to hit here. Now, it's quite possible, and it does happen. You will lose every now and then. So let's just see which one happens first. That's it. In this case, you're just stuck in a trade. You're just watching it go up and down, and you've probably exited by now because you're just not, nothing's happening. The market's just going sideways, and that happens. Okay, so just be patient. And so, oops. I don't like to see the market just because I like to be surprised, because when you're actually in trading, you don't know what's going to happen. So you want to pretend as if you are actually in that market. Okay, you're watching to see what happens. Now see, it bounces off that range. Now it goes a little further because remember, we didn't mark this down. We didn't consider the fact that there was more support here. So it bounced off that support, and look how much it went up. Right, 8 o'clock, from 44 to 64. That's 20 pips. It's 200 micro pips. Okay, and then you're seeing some resistance here. So you might want to add another line there. I'm just not going to do it, but you can add another line there. Just watch it go back and forth, back and forth. Okay, so you're now watching to see what happens when it hits this line or this area again, and it goes down. Boom. See, old resistance becomes new. The old support becomes new resistance, and boom. Anyways, hope you get the idea. It was a little late night for me. I just wanted to shoot a quick video for you guys. Hope you enjoyed it, and if you did, I encourage you, please subscribe and please hit the like button. Thank you very much.